What up, crew? In the last live stream, we spoke about symmetrical triangle patterns. This is one of the most widely used patterns, but also one of the more easily misunderstood and badly traded patterns. This is a step-by-step tutorial on how to do it right, so stay tuned until the end. Of course, the first thing is to break down the concept of a symmetrical triangle. In very simple terms, a symmetrical triangle is when the price is making consistent lower highs as well as higher lows. This is showing a squeeze on the charts in volatility. This is hugely important to understand because for an uptrend in market structure, we look for higher highs and higher lows. For a downtrend, we look for lower highs and lower lows. If you see lower highs and higher lows, we are moving into a very, very nice trading opportunity. Screenshot this if you needed to, tattoo it on the back of your eyelids. Here you have a downward sloping trend line. Here you have an upward sloping trend line. Watch the trend line tutorial if you need to. The pinpoint of the triangle is known as your apex. We're going to be looking for upside breakouts as well as downside breakouts. We're going to be looking for retests as a strategy, and I'm also going to teach you the pro hedge trading strategy to trade these from both the resistance and the support. Okay, one more thing to take note of here is that these squeezes are very, very relevant to crypto, as these often lead to very, very sharp moves. Okay, and this squeeze in volatility represents indecision in the market. It's an opportunity to really hone in on a beautiful trade. Step one for drawing in these channels: head to your charting software. I like to use TradingView for this. You can also use the Bybit charts. They are very nice. I like to use TradingView because it retains the history for a very, very long time on the charts. You want to zoom out and make sure that your charts are nicely spaced on your screen, and try to identify a place on the charts where you are seeing, of course, these lower highs coming in. We can see here a downwards sloping angle on our trend, and we can see an upwards sloping angle on the uptrend. Here we can always first watch out for a squeeze in volatility. We can see that the price is squeezing. The second step is to draw in your trend lines. So simply draw them in. This is looking back in time, but try to draw these in as soon as you are witnessing a squeeze. As soon as you can see here that there are these higher lows and there are these lower highs, try to draw in your trend lines. Draw in your downward sloping trend line at the swing highs. Draw in your upward sloping trend line at the swing lows. The third step, very simple. Make sure there are multiple touch points at these trend lines. The next step is to measure this pattern. A lot do go wrong in this step, and it's very simple. You want to take your trend line tool. Once again, very important. Under your line tools, find your trend line. Make sure you star it so that you can easily find it on your favorites bar. Very simply draw in your trend line from the first swing low to the first swing high. So where you entered into your symmetrical triangle pattern, that is how you extrapolate your price target. This is mathematics, and this really does show you how to trade this pattern perfectly. As you can see, mathematics does not lie to us. This is an extremely recent symmetrical triangle on the 4-hour chart from the last few days that beautifully reached its price target. The bias for these symmetrical triangles is a continuation of the current trend. So there is a slight bias that if you enter the symmetrical triangle from the bottom, you are slightly more likely to exit the symmetrical triangle from the top and continue your uptrend. Remember, there is also a possibility that you could see this symmetrical triangle break to the downside. So I'm going to give you a very nice pro trading strategy for that. So let's first look at the breakout trading strategy for this pattern. This is, as most of you know, not my preferred trading strategy because it can come back to bite you. This is a great example of just how important position sizing is, as well as risk management. The breakout strategy says when you start to get candle closes above the trend line is when you can start to look for your long trades with your stop loss below the previous swing low. We can see right here you would have actually been stopped out, and then your next entry into the breakout strategy would have been your better entry. Remember to only always risk a little bit at your stop loss so that you can enter into the trade again and earn a lot off a little bit. This is a great example of why I prefer the hedge trading strategy from extreme support and resistance, as well as the retest strategy. So let me give you a pro insight here on really how to trade this pattern, because I do believe that a lot of the time these patterns are traded very badly and it causes a lot of loss. I personally do not trade these patterns using a breakout strategy. What I do to trade these patterns is I hedge trade them. So I take shorts from the resistance and I take longs from the support. When price comes down to my support, I add to my long trade and I keep it open. When price comes up to my resistance, I add to my short trade and I keep it open. If you were really diligent and you started to pick up on this pattern, the first time you would have entered your short is of course right here. So always draw in your trade. Make sure you're giving yourself nice room for your stop. Here we can see you could have entered your short trade round about here. Give yourself a nice risk to reward ratio. Of course, take gradual profits in this trade, but according to the hedge trading strategy, you don't close your short trade. You actually take gradual profits along the way, and then you add to your position. You add to your position. You add to your position. And this allows you to actually earn within this range. You build your shorts from the resistance. You build your longs from the support. So here we can see we are getting nice relevance on this support line, so you can start to enter your long trades. Make sure you give yourself a nice bit of buffer below your previous swing low. Make sure there's a nice risk to reward ratio above 1 to 2. Ideally you want to be looking for a 1 to 3. Okay, I know this is complicated, this is advanced, but you hedge your short positions and your long positions, and you add to your short positions at the resistance, you add to your long positions at the support. And the beauty of this is you can make gradual profits along the way. Of course, realize some of those profits, add some of the profits back into the short trade, back into the long trade. And what happens here is that eventually this pattern will break out either to the upside or the downside, and either your long trade or your short trade will go into parabolic profits. I know this is not one of the more well-known strategies for trading this triangle. It is a little bit more advanced, but for me, it really is the pro way to do this. A very nice strategy, if the hedge trading strategy is too advanced, is to trade the retest. So here, if you see the breakout of your symmetrical triangle, wait for the retest. And here is a clear example of why you should always give yourself a nice buffer for your stop loss. We can see the last major swing wick is here, and you know, wicks show liquidity. They show you where your buffer needs to be for your stop loss, and make sure that you are trading these retests when the volume is coming in. You could have traded the longs from the support in the hedge trading strategy. You could have traded the breakout candles, and you could have also traded this retest. Please also use your Fibonacci extension to show you where your gradual take profits should be. Watch my video on the Fibonacci extension if you need to. Very nice take profit levels. Very important to keep in mind for risk management. Always use a stop loss. Only risk 1 to 2% of your trading portfolio at any single stop loss in any one trade. Some common pitfalls is be aware of news events that can always invalidate these kinds of trades. If Trump decides to pump the market, if Trump decides to dump the market, of course, these kinds of patterns can be invalidated, and always make sure that you are aware of larger market structure. Here we can actually see that the charts are giving us higher lows and higher highs, which is an upward sloping market structure, which also gives our bias for a breakout to the upside. Another important tip here is to always combine these patterns with other indicators like your RSI, your volume, your MACD. A very nice one for these are your moving averages. Watch my moving average tutorial if you need to learn to understand the moving average crosses. Very, very important. Thanks for watching, crew. Show the love with a like and a share, and subscribe to the channel if you're new. Also, be sure to join my trading academy on Telegram, and of course, always play from a position of power and strength.